We'll play it by ear, Butch. Right? Great. So are we good with the video? Then we. Okay. And the PowerPoint is up? Oh, perfect. Good. Look at us. Go ahead. Perfect. Okay, we're going to go ahead and get started. Thank you and welcome everybody. It's our first event at the Climate Registry. So thank you. Thank you. In Egypt, we were the closer, and here in the UAE, we're the opener. So thank you again to everybody for being here, both in person and watching over our virtual live stream. We appreciate you being here. And to get started, again, it's my privilege to introduce our current president of the National Association of Insurance Commissioners, who's going to share a few words with us. Commissioner Clara Lindley Myers from Missouri, who has provided a recorded message to welcome us to today's announcement. So we can play the video.
Good afternoon. Ladies, gentlemen, thank you for welcoming me to join you virtually today to highlight the climate risk and resilience
It's bound to happen. I mean, come on.
United States through the National Association of Insurance Commissioners, the organizing body for state insurance.
We do have insurance coverage for this, by the way.
National meeting in Orlando, Florida, so I'm unable to join you in person. As you will hear from California Insurance Commissioner Ricardo Lara, state insurance regulators have a front-line perspective on what consumers are experiencing and the challenges that insurance companies. Good afternoon, ladies, gentlemen. Thank you for welcoming me to join you virtually today to highlight the climate risk and resilience work we've been doing in the United States through the National Association of Insurance Commissioners, the organizing body for state insurance regulators. This week, the NAIC is holding its fall national meeting in Orlando, Florida, so I'm unable to join you in person. As you will hear from California Insurance Commissioner Ricardo Lara, state insurance regulators have a front-line perspective on what consumers are experiencing and the challenges that insurance companies are facing as natural perils persist across our nation. Since a strong insurance market usually indicates a strong economy, we know that closing protection gaps, including the climate-induced coverage gap, in the insurance industry is one way of ensuring stable and vibrant communities. We have a specific responsibility as insurance supervisors to supervise insurers to ensure that they are acting properly and have the financial resources to cover.
Recording in progress.
Our climate risk and resiliency work has focused on identifying risk, exploring solutions that reduce risk, improving financial oversight of the industry, and educating consumers. The NAIC established the Climate Risk and Resiliency Task Force in 2020 as an executive-level task force. The task force grew out of a working group that explored climate risk as far back as 2008. This year, 47 states or territories are members, and we're led by co-chairs Alaska Insurance Director Lori Winghire and California Insurance Commissioner Ricardo Lara. The task force serves as a coordinating body for NAIC members to discuss climate-related risks and resiliency issues among state insurance regulators, industry, and other stakeholders, including our international counterparts. The Climate Risk and Resiliency Task Force includes the Solvency Workstream, Climate Risk Disclosure Survey, the Catastrophic Modeling Center of Excellence, and other focus areas. One of the strategic tools in place for more than a decade is the Climate Risk Disclosure Survey, which collects insurer data to help identify trends, vulnerabilities, and best practices for how insurers manage climate-related risks. This year, 27 states and jurisdictions are participating, up from 16 states and territories in 2022. The survey requires insurers to publicly disclose their governance strategy, risk management practices, and how they measure and monitor climate-related risk. The annual survey provides robust insight from a broad range of insurance companies covering nearly 85% of the United States insurance market. The pre-disaster mitigation is another tool to offset the risks from natural perils. While the availability and affordability of insurance coverage for a particular set of risks will fluctuate over time, steps taken to minimize those risks before they become losses on an insurer's balance sheet will help protect our citizens and bring down the costs associated with natural catastrophes. Part of this work involves educating consumers about ways to reduce their risk before a disaster strikes and any incentive that might be available to them for undertaking certain property fortifications. The Climate and Resiliency Task Force tracks risk mitigation programs to facilitate sharing best practices among the states. The California Safer from Wildfires program, for example, provides premium incentives for reducing wildfire risk through home hardening, while the Strengthen Alabama Homes program provides grants to homeowners to retrofit properties based on the Insurance Institute for Business and Home Safety, or IBHS, fortified standard. Under the Climate and Resiliency Task Force Technology Workstream, the Catastrophe Modeling Center of Excellence was developed to provide state insurance regulators with the necessary technical expertise, tools, and information regarding catastrophe models and the perils relevant for their region. The state insurance supervisors have been sharing best practices and mutual learning as part of the NAIC's laboratory of the state's approach to devise solutions to shared problems, including protection gaps and climate resiliency. To provide additional insight into insurance availability and affordability, the NAIC's Property and Casualty Insurance C Committee is building a protection gap monitoring dashboard for state regulators. Building on the solid foundation of the Climate Risk Disclosure Survey, the Property and Casualty Insurance C Committee is creating a long-term framework for collecting more granular data from insurance companies related to climate-intensified wildfires, floods, hailstorms, and other perils to better understand property markets. State insurance regulators through the NAIC are finalizing a data call to help state insurance regulators collect more detailed data from insurers to better understand how property markets are performing in their states and identify potential new coverage gaps, including changes in deductibles and coverage types and affordability and availability issues. We're seeking to answer questions like, what is driving affordability and availability challenges? Are insurers moving into or out of certain geographic areas? How has the cost of residential homeowners insurance changed by geography? This initial data call is meant to be a starting point. Ultimately, the goal is to develop a long-term, robust property market data collection strategy versus a one-time data call. NAIC members believe that state insurance departments have both the expertise and necessary regulatory authority to gather, analyze, and utilize data from their unique market conditions and meet the needs of policyholders. States are also working with insurers on underwriting and rating incentives or discounts tied to community and property level risk reduction actions like home hardening or defensible space, or community level risk reduction actions like joining a Firewise community. And we continue to engage with the United States Department of Treasury, Federal Insurance Office, or FIO staff to better meet our respective goals. Insurance alone is not going to help the United States respond to the increasing frequency and severity of weather events that impact all aspects of our economy. But to the extent possible, insurance has a role to play, so we too, as state insurance commissioners and the NAIC, will fill that void. I want to thank you again for the opportunity to share some of what the NAIC is doing in the area of climate risk and resiliency.
Perfect. Thank you. Thank you to our director, Lindley Myers, and our president at NAIC, who gave you a very good wrap-up of the work that we've been doing over the last couple years. And, very proud of the work that we did to lead the work around the TCFD climate disclosures in the insurance companies in the country, representing now 80% of our overall market. So today, coupled with what we've accomplished already at NAIC, our goal today is really to use this focused discussion to support the launch of our NAIC first ever National Climate Resiliency Strategy, which is being considered for adoption by our Climate and Resiliency Task Force, as you heard from our president,
Recording in
Orlando
progress.
this weekend. So just in a couple days. And you're getting the first look at the work that we're doing around this strategy, and we'll have a robust discussion as people our experts react to our draft strategy. And you could find the strategy now on our website for the NAIC Climate and Resiliency Task Force within the meeting materials for Sunday meetings. So we've already made it public. Again, I want to thank our my co-chair of our task force from Alaska, Lori Winghire. And as you can imagine, Alaska and California working together on these important issues, because we know that these climate catastrophes do not respect state boundaries. They don't respect political boundaries, and we can all agree that the climate is changing, and we're demonstrating that through our work at NAIC. And by announcing the strategy today and getting those reactions from our experts from our global panel here at the Climate Registry Pavilion, we can demonstrate that the ongoing work by our U.S. insurance regulators and really further incorporate more ideas into this first ever strategy. And this National Climate Resiliency Strategy, again, it's the first time that the U.S. regulators have created a coordinated plan of resiliency actions, bringing together our insurance expertise with clear objectives to create new tools to recognize and manage the risks that we're all facing in the United States of America. And we are at a watershed moment on climate and resiliency where no longer can insurance be an afterthought in our global conversation around climate change. It has to be front and center, and we're proud that today we're doing just that. Resiliency will not happen in one step, but it is essential to all of our climate goals. The pathways to 1.5 will require resilient infrastructure and communities to be able to adapt to this changing climate of ours. Creating resilient communities will be bolstered by investments in protecting our wetlands, restoring floodplains, and expanding our urban forests. For years, U.S. regulators from the Great Lakes to the Gulf of Mexico have worked together to strengthen insurance markets for the future. Today, we are seeing the consequences from multiple perils, including record-setting wildfires, floods, and droughts, and that are threatening our communities and, of course, our economies. And this strategy brings together insights from our fellow insurance regulators, from the different types of jurisdictions, large and small populations, coastal and inland, urban and rural, and the island jurisdictions that face urgent and unique challenges of sea level rise. So again, this resiliency strategy provides, in our opinion, a better way to set consistent priorities and advocate for investments that benefit insurability for homeowners and businesses. This strategy includes specific actions that you will see where we learn from the successes of our local adaptation programs, investments, and natural infrastructure, and sustainable building practices. The blending of our local examples with multi-state coordination is where the NAIC will continue to excel. So let's walk through those resiliency actions now. And as we move forward, Mike, you got the clicker? Right, be resilient. That's- Got it. We got it. So the first resilient action is to close protection gaps. We will identify and coordinate how we measure protection gaps, and we're going to set priorities to reduce those gaps. This will empower commissioners with information to work with local governments, agencies, and businesses to achieve more resilient building codes and mitigation practices to reduce vulnerability for major perils in each region. As you see the report, we're going to have recommended action points that we're working on to achieve this protection gap closure. Secondly, we will create a new blueprint for expanding flood insurance options. Flood is a particular widespread risk in all of our areas and in Canada as well. And if we do not find new pathways to reduce that gap, the cost will overwhelm our climate goals. And we know that the NFIP program in the United States is not enough. We need to be proactive and start targeting new and innovative approaches when it comes to flood protection. The third action is to bring together comprehensive data to understand how insurance companies are reacting to climate risk, whether that is retreating from areas or increasing deductibles or decreasing coverage limits, which we all see are happening around our country. The data that we collect will combined with the risk information will be critical to our risk communication efforts. You heard from our president, we are going to be engaging in the first ever data call around climate to start getting the data. If we do not have the data, we can't measure it, and we can't put together a plan to effectively succeed when it comes to this data gathering. The fourth action is to encourage wide-scale risk mitigation. This is really the core part of the strategy that will be informed by collected data, modeling, and risk assessments, and really expanding the success of our grant programs and insurance investments is really essential to the future insurability of our homes and business. We've seen that states already have been being very creative around mitigation and risk mitigation. We compile all that information and data so that we're not reinventing the wheels, and states have somewhere to start with as they're putting together their risk mitigation programs. Number the fifth resiliency action is really to develop new solvency tools like scenario analysis. New scenario analysis will be complementary to the tools that will make us more informed on critical risks and potential impacts to ensure solvency. So in summary, these 5 actions are really forward-looking strategies that will empower U.S. regulators to utilize new data that we're collecting, to advocate for state funding for risk reduction, to encourage the insurance incentives to promote safety and adaptation to the risks that we're all facing. And you can find more information on the NAIC's website or by using this QR code and the strategy is really under construction for the adoption while the COP is occurring. So we encourage you to download the draft version of the report that we have for you available. And now we're going to move to the exciting part of the discussion, which is joining us to really react to the work that we've been doing around this and our strategy and how it helps overall our global goals to start working on how do we protect our homeowners and our businesses. So joining us for the discussion, we have Butch Bacani from the United Nations PSI, and we have Lesley Ndlovu. Did I say that right? Perfect. CEO of African Risk Capacity, Jean-Francois from the Canadian Ministry of Environment, and of course Mike Peterson, who is my deputy on climate and sustainability at the Department of Insurance in California. So I'm going to start with you, Butch, and get some of your initial reactions. At the UN PSI, you are really a hub of policy and ideas on sustainable insurance. We've been working together for several years now, and the UN PSI just celebrated its 10-year anniversary. When you look at this climate resiliency strategy, where do you see the most potential for actions to help expand insurance and help communities avoid the worst climate impacts?
Thank you.
I know that was a mouthful, but I know you can handle it.
I got it. Yeah. First of all, I'd like to commend Commissioner Lara, Director Lindley Myers, and U.S. National Association of Insurance Commissioners, because I think we need to celebrate this moment, because what this is showing us, first of all, is a signal that we need a united front to confront climate risk. And that's what happened yesterday with the operationalization of the Loss and Damage Fund. And we are actually seeing that today with the launch of this strategy. So the way I see this strategy and looking at best practices on sustainable insurance that we've seen globally, it is the way I see the risk management continuum in insurance. It starts with understanding risk. And then once you have a better understanding of risk, you can then prevent and reduce risk. So understanding risk, climate and catastrophe risk analytics and modeling are important to understand and quantify risk. Then you need to have prevention and risk reduction measures, flood protection measures, enhancing the resiliency of homes against hurricanes and wildfires. And then you share risk through insurance as a financial risk management instrument. So on all of those points, you can actually plot on the x-axis the climate resilience strategy of the NAIC. And I'll just give examples because I think there are opportunities across the board. First, on understanding risk. We did a pilot of the climate recommendations of the TCFD task force a few years ago with insurance companies. And the results were quite telling. On physical risk management and using climate change scenarios that go 10, 20 years down the road, that is the bread and butter expertise of the insurance industry. Even on that, our findings show that it could be enhanced, because once you start looking decades down the road and imputing latest climate science, it's something that could be improved over time, even by the industry itself. As we transition from a high carbon to a net zero emissions economy, the pilot showed that there's still a lot of work that's needed in the insurance market to better understand how that would impact insurance portfolios. And then when it comes to climate-related litigation risk, it's something that really has to be bumped up in terms of more sophisticated analysis. Now, on the other parts, for example, of risk reduction, we believe that nature-based solutions across the world is a largely untapped opportunity.
Right.
So it's been proven time and again, science and in pilots, that wetlands and forests, all the way to coral reefs and mangroves in the tropics, I am from the Philippines, so that they exist there, that it's been proven that they are effective buffers to storm surge, and they also reduce extreme heat in the case of urban forests and obviously tropical forests. At the same time, they are also sinks for carbon.
Right.
And then on the insurance side, we have seen a million opportunities there at the macro, meso, and micro level scale. So on the macro side, you have the African Risk Capacity, the Caribbean Catastrophe Risk Insurance Facility, the Southeast Asian Disaster Risk Insurance Facility. On the meso side, we have at the UN PSI, and my colleague here, Brandon Matthews, is the global lead for a sustainable insurance facility that looks to really bring to speed and scale climate insurance solutions for micro, small, and medium-sized enterprises in 68 vulnerable developing countries around the world. And then on the micro insurance side, you'll have a lot of innovation on parametric insurance for smallholder farmers, health insurance, and property insurance for low-income communities. So I'll end on that note. I do believe that the experimentation and insurance solutions in the global south, actually, the global north can learn a lot from.
Absolutely. I think they've been leaders. Certainly, as we in NAIC are looking at what are the projects and these unique products that have been working, it's really in the global south that we turn to and have been leaders in this space. You're absolutely right. So thank you, Butch. And I also appreciate the fact that we stand united as states and as state regulators for the first time, not only acknowledging climate risk, but really coming together in a united front to attack this problem. So thank you, Butch, for helping us, getting us there as well too. So Mike, for my team, you've been this has been one of your biggest and most important projects. I think can you level set for us why this moment in time is important to release a strategy of this nature? What does that mean for our country, and what does it mean for the world and for industry markets in general?
Yeah, absolutely. I mean, I'll add on to what Butch has said a bit here, but I think there's two take-home messages that I want to really drive home in terms of why this moment is so important for this type of strategy. The first is that this is really focused on insurance, and a lot of times we do broad resilience strategies that look at a bunch of different things, but this is really taking on what can insurance do, and it plays such an important role as a cornerstone when it comes to resilience for communities, resilience for nature. And so I think that when you look at the different members within the NAIC, you have large states, big states, coastal states, inland states, and this strategy allows us to showcase all the individual examples of innovation that we have. We have examples of home hardening in Alabama and home hardening in California. We have examples of grant programs in North Carolina. And you take all these, and I think it really gives a nice focused look on what the insurance sector can do to broaden resilient outcomes. And then secondly, it's forward-looking. And that's a really big deal, because one of the challenges when you do look at insurance is that it has historically been a disaster recovery type of approach. And so we look at the events that happen, the recovery from them. But what this strategy does is it says, okay, we have data that we can collect, we have scenario analysis we can do, but it's all looking forward to the future of how do we expand insurance, how do we get a more sustainable market. And that's really crucial right now, because not only is that important for the areas that are facing perils, but the costs of disasters are ballooning. And so if we don't get to the root cause of disaster management, disaster finance, it's going to start to overwhelm many of our other climate goals and make them really hard to achieve. And so I think that this strategy, focusing on insurance, looking forward and putting together the pieces that are going to help us achieve a sustainable insurance market, is just really critical right at this moment.
Thank you. And I think the important aspect too that you mentioned is now we're using insurance to incentivize good behavior, like mitigation, and incentivizing through, for example, the Alabama project or program, to giving you grants to do the home hardening. So we're starting to use insurance as a tool to incentivize this behavior, to protect nature, and be part of the solution at the front end, and not just be used as the traditional way as we've seen insurance. And so I always say, just as the concept of insurance was so revolutionary at the time, now it's time for insurance to once again be part of this effort and be as creative as it was once it was first conceived. And so and that's part of why we need to be having more discussions around insurance at COP and around the world. And so, Lesley, I come to you around, climate change, as you know, is intensifying, wildfires and flooding, but also drought and extreme heat. the African risk capacity has taken really innovative approaches to resilience for perils that are rarely insured. And we're starting barely in the United States to start talking about what are the costs, how do we collect data around extreme heat and drought, not just on human health, but on infrastructure. Can you describe how ARC has prioritized resilience and how that has helped the lives of people within your jurisdiction?
Okay, keep going.
There you're good.
So, first of all, I would like to say, congratulations to you, Commissioner Lara, and to your colleagues. Those of us that follow the events in the U.S. know that it's difficult to get the commissioners of insurance to agree on anything, especially from California and Alaska. So, very well done on that. And then just building, I think, on what has already been said. We think about insurance from the perspective of really hazard, exposure, and vulnerability. So hazard, is the natural perils that you've talked about: droughts, floods, tropical cyclones, earthquakes in some instances. Then the exposure on the African continent and everywhere else in the world at the national level is really a function of your longitude and latitude. So really there isn't much that you can do about your exposure, but really what you can control at the national level is the vulnerability. How bad is the impact of the occurrence of these events? And then the way we look at this is then the approach is either to avoid where you can, reduce where you can, and then have insurance as a recovery mechanism. The data that we collect on the insurance side can also be very useful for the allocation of investments towards adaptation, because we know as insurers where the impact is going to be the most severe, where damage can be reduced by a flood wall, as Butch has mentioned, or by irrigation in the case of drought. So this is basically the framework that we start with. And I say that in the beginning because also insurance is important, but it doesn't exist in a vacuum. It's part of a much broader ecosystem. Correct. For us at the African Risk Capacity, we target providing insurance to the 700 million Africans whose economic livelihoods can be disrupted by extreme weather events. Currently, we're providing insurance to about 50 million people on the African continent every single year. So it was 0 10 years ago, it's 50 million now. So of course, a lot of progress has been made, but there's still a lot more that needs to be done. What we have found, just getting back to the specific question that you asked, is that we needed to start by addressing the most pressing climate problem that the African continent faces, and this was drought. So we created a parametric insurance program for drought. And the way it works is we use satellite data to calibrate the amount of rainfall in a particular location, meaning that we already know when there hasn't been enough rainfall in a particular location, and if this is severe enough, then it triggers the payment of an insurance claim. The advantage of using parametric insurance is that, firstly, it's really fast, so we are able to calculate what the claim should be within 2 or 3 days of an event happening. There is no claims processing process, so because it's all calculated and modeled using data. This also enforces transparency because we put the data that we're using to calculate claims out on our website, meaning that our clients can also then recalculate what we have done and be satisfied that it's been done correctly. We don't need to have boots on the ground to be able to carry out this insurance. Actually, if you show us the data, we can create the program and we can pay the claims. So this makes it ultra
Streamlined.
scalable, right? And we operate now in 38 African countries. Then, so in addition to drought, we have expanded into covering new perils. We launched our tropical cyclone insurance program for the Southwest Indian Ocean. So Madagascar, Mozambique, Comoros, Mauritius, Reunion. I'm forgetting half a dozen countries. But
That's
since
always
they're
a
not-
problem when you start listing.
yeah, but since they're not here, okay. And then we have also launched into flood insurance. And again, flood is one term that captures a number of different risks. So you can have flooding from excess rainfall. You can have flooding from a river overflowing its banks. You can have flooding from storm surge. And we are covering all aspects of flooding. Actually, on this path, we find that covering additional perils has made us more relevant to what the African communities need. It has also improved on the business side in terms of diversification, because I know it sometimes happens that you have a drought and a flood in one location, but generally you're having one or the other. So from an insurance diversification standpoint, it's extremely helpful. Also, insurance is a business of scale. Right? As you would all know, insuring one car in a city is risky, but insuring 1 million cars is not as risky, because not all the 1 million cars can have a claim at the same time. So this has been our approach, and we find it's beneficial for the communities that we work in, but it's also beneficial for us as a business. Thank you.
Thank you, Lesley. And something that you did, and what the African Risk Capacity has done brilliantly, is also communicating the peril and communicating the need to be able to mitigate that. That's something we are barely starting to do in California around extreme heat and drought, on why we need these parametric products, why are they important, and how streamlined you did it to be able to just cut all the middle red tape so it goes directly to benefit the consumer. We constantly are fighting the mentality that government's going to save us, right? And why would I have to do this if government's going to come in and help? And we always remind folks, government's going to be there to make sure you're alive and you have food for a couple of days. And after that, you're pretty much on your own, right? And so why a product like this is important, especially around perils that we're still trying to wrap our head around, like extreme heat and drought in areas, for example, like in Los Angeles or Imperial County, that have had the hottest days on record in our history of existence. So thank you again for your great work. Jean-Francois, obviously Canada and the United States, great neighbors, but we also not only share a border, but many of the same perils. All we need to just remind ourselves of the wildfires in the East Coast. But of course, we can never forget flooding. People tend to forget, even in California, after over the last 40 years, every single county in California has experienced a flood emergency. And of course, extreme heat, extreme cold. How are you approaching climate resilience at the national level, and also how do you encourage those local solutions? Because I know a lot of the work's being done in Canada that we're looking at, these big macro problems and kind of perspectives. How do you bring that to the local folks?
Yeah, no, first of all, I want to commend the NAIC for this work. This is actually fascinating, and this is so important that we have these discussions. The insurance system is a necessary conditions to get it right, but it's not a sufficient one.
Right.
You need also the governments to come with an approach that is complementary. Right. It would be more general and will actually kind of tackle, let's say, the key conditions of resiliency. Right. That's what we're trying to do. We have, and it's on our website, we did develop a national adaptation strategy, 2 years of consultation and engagement, focus on different sectors. The objective is really to give to whatever level of government the right information to make the right decision at the right time on adaptations.
Right.
At the moment, what we find is that there's a lot of people concerned with adaptation. There's a lot of people concerned with what's going on, but also people who don't feel they have the right information.
Right.
And how and what should they do? They hear about solutions, they don't know where they are, and so on. I've been lucky as a Deputy Minister of Environment, Canada and Climate Change. I also was a Deputy Minister of Infrastructure in the past, so I touched that.
Perfect.
And I was
Perfect
Deputy
match.
Minister of Indigenous Services, so I've seen First Nations been evacuated sometime 2 times the
Right.
same year, the same First Nation community. One for flood and after that for fires, or 2 times for flood. So those are the things that are happening on a more regular basis and are there. So if you look at the National Adaptation Strategy, we've got 6 big sectors: disaster resiliency, health and well-being is the second one, nature and biodiversity, infrastructure, of course, and economy and workers. We do have, based on this, some principle on the how. So you mentioned local communities. For us, the how means precisely that, is we work with people. We want to make sure that the populations and the leaders have the tools that they need to make the decision, because that's part of resilience.
Right.
And we see it every time, is when people feel they don't have the tools, that's where actually the resiliency is not good. We did develop a national action plan based on this. We've got more than 70 kind of actions with a lot of goals and medium-term objectives and so on. I will not go into the detail. I would give you some example of the kind of actions that we're working on. We do have a disaster mitigation and adaptation fund on infrastructure that also fund natural infrastructure. So this is something that we're doing. We've got $3.9 billion that we're using on this, so specifically. But it's, again, the issue is also, where do you get the best for the funding? People will tend to go where the last disaster was. Sometimes it doesn't come at the same place. So how do you make the risk-based approach that is the best one in terms of achieving that? We do have a fund of more than $500 million with municipalities that they can use for green municipalities, developing their plan in terms of adaptation. People mentioned trees. We did develop, when actually I was Deputy Minister of Natural Resources, we did develop a 2 billion trees initiatives, where we do reforestation, including trees in cities. How do you use trees in cities to control the heat,
Urban
but
forests,
also
yeah.
and prevent flooding? We have a special program that we call Indigenous Climate Leadership. We discovered that we've got a lot of little programs that try to address issues of communities. The problem is just that each of them comes with its own kind of structure, and each of them, when you spread it out, comes with not enough money. So how do you pull them and to develop a real strategic approach for communities to decide what is the best solution for them? We have at the national level a big, what we call the DFA, which is a Disaster Federal Assistance Program. This is the program that kicks in when there's big disasters. And as you notice in Canada, we share a lot of smokes with you last year. We're getting more of those disasters. So we are reviewing that on how do you include Build Back Better, for example, into the programs, and how do you make sure that you use the programs also to change the behavior over time. So those are the kind of initiatives that we're doing at the national level. The next step for us with the strategy is now to go province by province and sit down and identifying what is the information that we have. We do invest, was mentioned before, satellite, flooding, mapping, and all this, that people can get the information. And that's our objective now, is to go really, really province by province, identifying the risk. Where do you have the biggest risk? And can we start aligning our programs together to actually tackle them? That's basically where we're going now.
Well, that's fantastic. And it's really aligned with what we're working on in terms of the data gathering, right? Because that also helps prioritize, not only it helps identify where the risk is, but where do we can start prioritizing and putting some resources around these different programs. So thank you for that. Lesley, I want to talk about, the equity lens to all of this. I mean, none of this would be meaningful if we don't put an equity lens and some sort of a focus on our most vulnerable, that are the ones that are not only most exposed to these climate changes. And I always say, in the United States, the way cities were developed, racism was racism was put in there by design. There's a reason why low-income communities are the ones that suffer, because they were the ones that have been pushed to these areas as these cities developed over time in the United States. So at the NAIC, closing the protection gaps are critical for us and really has important economic impacts. Promoting strong, equitable recoveries are key for us. So it's not just the wealthy that get to rebuild and get to rebuild as quickly as possible. From your experiences, because I know that's something near and dear to your heart, what are the lessons do you think we can learn from your experiences and expertise in not only reducing protection gaps in regions, but how do we do that given the diverse perils that we're facing?
Thank you very much for that question, because it is the elephant in the room. Right? So maybe to start with something positive, I think the creation of the Loss and Damage Fund is going to go a long way in addressing some of the structural inequalities that we are seeing. For us, at the insurance level, the kind of insurance that we provide is almost by design targeted at the most vulnerable communities. Also, the international development community, actually including the government of Canada, have been crucial partners in the development of our insurance programs. And I'll just highlight a few examples on how we work with them. So firstly, insurance is a capital-intensive business. Because how much business you can underwrite is a function of how much capital you have. Obviously, as a commissioner of insurance, this will be near and dear to your heart as well. So when the African Risk Capacity was set up, we received interest-free subordinated debt from the government of the UK and from the government of Germany, meaning that we structurally have a lower cost of capital than traditional insurers. And this low cost of capital is then reflected in the way we underwrite and the way we price our products. So then this it gives an implicit subsidy. We would love a check from the Canadians, by the way. Then the second way we make our programs affordable is actually through direct premium subsidies. So we use donor funding from the global north to reduce the cost of premiums. We have a multi-donor trust fund that receives these, and then the subsidies are allocated, again targeting the people that are most vulnerable but are not in a position to afford insurance premiums. The fact that the program is subsidized also means that we can build within the construct of the program some level of transparency, meaning that we ask whoever is the recipient of the funds, such as the government, whether it's the federal government level or the local government level, to set up a plan on how they are going to utilize any funding that they receive, meaning that by the time the claim is paid to them, they already have a plan that is well documented and is available to everyone on how the funds will be utilized. This is important because when the money gets there, they have a plan, so they go straight to implementation. And then also you can compare what the funds were actually spent on versus what they intended to spend it on, bringing a high level of transparency and accountability to the whole process. Then finally, also we've partnered with some development institutions on the creation of new products. If you follow the traditional insurance business model, you can only develop a product once you've done a market study and you're satisfied that there are enough people that need the product, and the product has to break even within a year or two. But receiving development funding on our side actually means that we can develop a product that is needed with a much longer lead time. So as an example, the development of our tropical cyclone product was funded by KfW. They gave us a $600,000 grant. We collected all the data, we developed the product, and for the first 2 years, we only had one client, the government of Madagascar. But because then the product has been developed as a public good, it means that we can sustain the product even with only one client. So then this, again, are just examples I wanted to highlight on how we utilize development funding to scale up insurance programs. And obviously, once the insurance programs get to a sufficient level of scale and diversification, then they become affordable to everyone. And that's a very good example of how development funding is used as a catalyst for the insurance markets.
Absolutely, you're absolutely right. And as we begin to work on these type of new products in the United States and in California, it's always important to recognize that you need that upstart capital, you need that development funding, and you're going to need some of these subsidies to be able to make sure that not only you keep the cost of the product down, but that you're able to be as creative as possible, right? Without the traditional ways of how you fund traditional insurance products. So thank you for that. Jean, I want to talk to you now next, and I know we're running out of time, so we want to be as brief as possible. But I was just in Toronto a couple months ago where we were having conversations around insurance and biodiversity protection, which I thought was mind-blowing. And leave it to our neighbors in the north to start looking at how we start looking at traditional insurance finance mechanisms to protect biodiversity now. And really Canada's led on nature-based solutions and really promoting it as the backbone of long-term risk reduction. How has your approach to the problem, let's say around flooding, by being innovative with investments around and in nature-based solutions, how has that come about? And again, kudos to that, because that's for us. We can't do any of this without ensuring that we're using nature as the first stop and the first line of defense to this ongoing fight that we have around climate change.
We have a significant, and we still have to learn a lot, to be honest with you, but we have now almost a long tradition of partnership with private sectors on nature solution. So since 1995, I remember well, we have what we call the eco gift. So if you want, you can, as a legacy, give your lands. So there's a tax incentive for you to give your land. There's organizations that will take it and will put it for conservation over 100 years. So we've got actually a lot of the country, especially portion of countries that are not necessarily big parks, if you want, where there is protections like that, and we encourage that. We do that also with wetland. So this is something that we always have been trying to push. So every time that we've got funding, we just try to create more that incentive. The other thing is we just signed, and ministers mentioned it again this morning, we did sign a project finance for permanence with First Nations in the north. That will cover a few times UK. Sorry for their ego, but that's quite big. So this is something where we come with First Nations. It's a different approach of conservation. It's an approach that is way more about the way of living and also the cultural aspect of it. And where we try to set it up and basically not being part of it. We still look at it from outside, but it's managed by itself. So that's one of the objectives, and it's something that we've been doing. So we still use our classic kind of toolbox or toolkits like parks and so on, but we do use a lot of those tools that allow for the civil society and business sectors to just come and just say, you know what, if you create some incentive, we will be happy to be there. So the one in the north is the first one. We did receive something like $800 million to do 3 or 4 of them, so we'll see for the others. It takes a lot of time, to be fair and honest, but it's actually kind of a promising. The rest is, as I mentioned, we have included an infrastructure, nature infrastructure, a few years ago, which was a bit of challenging for some. We used to pay for bridges more than for that. But it has changed the discussion around the table. So people are coming. They know that they're going to be money for that. So they're developing now this kind of infrastructure. The 2 billion trees is another example, but they're more classic example
Right.
of us actually coming. What I think is interesting, because our efforts would never be sufficient, is more those initiatives where you actually kind of create the incentive for the society to come with solutions.
Right. Absolutely. I love it. Engaging civil society is key. And if we don't get buy-in from civil society, we'll be wasting our time. Mike, I know we have two last questions that I want to really get to, and if we could be as brief, but before we have an announcement by our own Butch Bacani. You know, Lesley was commenting how difficult it is to see our different state regulators coming together. We've lived it, but you know, we've been able to really take out the politics of climate out of the NAIC and out of our discussions by really staying focused on our lane around what is our authority, what the needs are for us to be able to protect insurance consumers, and what are we going to do in the future, right? And so I think those are some of the key questions that brought us together quickly. And I said there's also nothing like Mother Nature sending you signal after signal after signal that we need to get our act together. And so if you can just briefly tell us, how does this resilience build on the strength and expertise already of our individual insurance regulators around the country?
One thing that's really interesting is that insurance regulators have a unique position when it comes to risk communication and also risk reduction communication. And so they get to see the costs and benefits of events, but also of the risk reduction. So when you say that Mother Nature is sending us signals, insurance regulators see those and they communicate those to consumers, local governments. Mother Nature also sends us signals on nature-based solutions. And so if you really care about expanding those, making an insurance argument that says this reduces risk and that's going to have benefits to the insurance sector is something that really kind of, I think, ties, you know, all insurance regulators together and gives us a really strong platform to work from. And so that's what we've really tried to do is really focus on that lane, and that's provided a national plan that'll help drive climate resilient decisions across the board.
Thank you, Mike. You're absolutely right. And to close this out, Lesley, I wanted to, you were starting to talk about this in the previous question about the traditional tools for risk analysis, both for insurance companies and for regulators, are either really looking at the past or the present state of the risk. But you have proven that we can look not only towards the path, but really look beyond what we're going to need as climate continues to change. What role do you see these tools playing going forward for the industry and for regulators looking at understanding protection gaps, these risk analysis tools like climate scenario analysis and stress testing that we are starting to engage in? How has that proven? We say without data, you can't calculate and you can't put a plan of action. What are your thoughts around there in terms of closing that protection gap?
Again, another very interesting question. So, as I mentioned earlier, our insurance programs are entirely parametric insurance programs. So, data is a key part of what we do. The data has to be accurate so that we can accurately calibrate the risk. And most importantly, we can accurately pay a claim because we don't want our customers to lose confidence in the data. So also just to acknowledge that in the past 10 years, that quality of the data has improved substantially because sometimes it's a chicken and egg problem where there isn't enough data because there are not enough users, but there are also not enough users because the quality of the data isn't good. But we've been able to bridge that gap, and every year the quality of the data gets much better. The way we position our insurance programs, as I mentioned again in the beginning, is as part of a broader ecosystem. So we make our data available to governments as part of the early warning system. And this works particularly well for tropical cyclones because from our models we can forecast the path of the tropical cyclone. We make this data available to the government and they can take evasive action, move populations before it gets really bad or before there's a direct hit. In the case of a drought, then it also enables the government to plan on how they are going to manage their food reserves. So then specifically on the insurance side, again, with the data that we have, we know which communities are most heavily impacted. So the insurance programs are then designed with those communities in mind. Also within those communities, there are more vulnerable groups like women, like young children. And again, because we collect the data, we're able to make this available. So then the work that we do on the insurance side is then extremely useful to the governments that we're working with, because we're not just solving a funding problem in terms of how the cost of the disaster will be paid for, but we're also helping them solve a more holistic problem in terms of early warning, in terms of allocation of resources, in terms of investment in adaptation and mitigation. And this is how we bring all the stakeholders together. Thank you.
Thank you, Lesley. And just to dovetail on that, the importance of having that data be transparent is critical for us as well. So thank you for, again, leading the way. And so now as we wrap up, just giving you some context that when this strategy is adopted by our NAIC members, hopefully on Sunday, Orlando time, we will be able to implement it. But it's important to note that we have already built on a foundation. The NAIC, again, you heard from our president, created our Center of Excellence on Modeling, a TCFD climate risk survey that covers 85% of the U.S. market, and tools for regulating solvency of insurance companies. These tools will help expand insurance options for people, for businesses, and for cities and our towns. Insurance regulators are going to continue to work in this space and adapt our strategy as we see what is happening in our communities. So this strategy is really going to be a living, breathing thing. We're going to be able to continue to modify, add as we continue to gain expertise and get the technology that we need to help us prepare for the future. But now I want to just, as we wrap up, pass it on to Butch. I want to end our conversation today with a few thoughts from you, Butch, quickly. And we have partnered on the California Sustainable Insurance Roadmap that we unveiled in Sharm el-Sheikh in Egypt last year. And the NAIC is working to finalize, of course, our own resilience strategy. And we have strong momentum with these new points of progress. Where do we go from here, Butch?
Yes, that's a lot. But first, I just want to reflect on the strategy again and go back to the strategy, why it's important. Because if you sum up the conversation today, my summary would be simple. To achieve sustainable insurance solutions, the bedrock is good risk management. And that is what the climate resilience strategy is all about. It enables risk-informed decision-making by stakeholders in order to build resilience in communities. I also want to make the point that as we're here in the UN Climate Conference, we need to bridge the gap between adaptation, climate change adaptation, and mitigation. As we live on a warming planet, yes, we must absolutely cope with the physical impacts of climate change. But if you look at the source of, we need to actually reduce emissions at the same time, and that for me is a form of risk mitigation, right? So actually adaptation and mitigation should go hand in hand. And on that note, I actually want to share one of my favorite risk management quotes. And it doesn't come from the insurance industry. It doesn't come from business. It actually comes from the UN. And it comes, I want to make sure that I don't misquote him. It comes from the late UN Secretary General Kofi Annan. And he goes, this was uttered in 1999, some 25 years ago, but it still rings true today. The quote says, building a culture of prevention is not easy. While the costs of prevention have to be paid in the present, its benefits lie in a distant future. Moreover, the benefits are not tangible. They are the disasters that did not happen.
Exactly.
And I think
Exactly.
what this strategy is trying to do is nurturing that culture of prevention. And I think on that note, everyone will win. Now, to answer your question, where do we go from here? There's only one way, which is to move forward and to forge ahead. But directionally speaking, we have to go west. And by west, west of Dubai, we need to go to the west coast of the largest insurance market in the world. That is California. And here's the announcement. In March 2024, we will be holding the first ever Global Sustainable Insurance Summit in the City of Angels. And that will be co-convened by the California Department of Insurance and the UN Principles for Sustainable Insurance. Consider that as the COP of sustainable insurance.
Exactly.
We will be convening African leaders, European leaders, Latin American leaders, Asia Pacific leaders, and obviously North American leaders, Canada and the US. For that event, the agenda is very simple. We want to address the most pressing sustainability challenges and opportunities in the world. Climate change adaptation and mitigation, so resilience and the transition to a net zero emissions economy, decarbonization, the nature agenda, biodiversity loss and ecosystem degradation. How can we really have a nature positive economy? And social and financial inclusion and closing the protection gaps. These are the priorities. The only credentials that you need to enter there are two things. One, you need to come up with speed, a solution on terms of speed. And then number two, a solution in terms of scale. So we don't want that to be a talk shop. We want that a summit where actionable insights, actions, concrete actions can really bring sustainable insurance solutions at speed and scale required by the climate emergency. So I think we've got our work cut out for us, Commissioner. I've already
Yes.
rolled up my sleeves, and I think we're gonna work according to Sheryl Crow until the sun comes up over Santa Monica
Boulevard, exactly. Thank you again for coming. Let's give our speakers a round of applause for being part of our great discussion. I want to thank everybody who's joined us online and, of course, everybody who made the trip here to Dubai. I hope you found this discussion fruitful. And again, thank you for supporting the work of the NAIC as we continue to unite not only in the U.S., in our continent, but around the world to continue to fight these perils and utilize insurance to actually help prevent disasters, protect human life, and protect our communities. Thank you again for being here. Really appreciate your time.
Recording stopped.